Okay, what are we given? What are we given? We are told that Apotre Uganda Limited is a registered company operating in the central district of Nakaseke with regional contract offices across the country. During the tender bidding for the financial year ending 30th June 2019, PUL emerged the winner. Supply 400,000 layer chicks per quarter. So these guys won a tender to supply 400,000 layer chicks per quarter for the whole financial year to the rural women farmers in fulfillment of the government's women in development program. Okay, all right. They are telling us that the terms and conditions of the supply are to transport. Here you have the terms and the conditions. You have the terms and the conditions. You have the terms and conditions. The terms and conditions of supply are to transport layer chicks directly to the beneficiary groups and ensure that each group receives their share. Next, we are told that PUL bid to charge government shillings at 2,540 per chick. They are delivered directly to the beneficiary. So PUL will charge government this amount of money per chick delivered directly to the beneficiaries. The fixed costs are estimated to increase by 10% per quarter in the year ending 30th June at 30th June at 2019. Okay, so this increase is very, very key. Variable cost per unit will also increase by 5% during the year as per the budget estimates passed by Parliament recently. Okay. Please, as you read MDC questions, let me tell you, MDC questions require sober mind. You are going to meet questions of different nature in MDC. It's a paper that doesn't have a format. So the way you interpret questions matters. You need to allow your mind to analyze critically. It's a paper where you don't need to cram. It's a paper where you need to understand and interpret your questions very well. That's what makes this paper to be hard. It doesn't have the format that you are going to follow, like financial reporting, that you follow this, like taxation, that you follow rules. Here, you just interpret these questions. You interpret these questions, and the way you answer doesn't have a specific format. You don't have a specific format. Where you say that you add back and do what? No. Here it depends on the scenario you are given. Just interpret the scenario very well using the technique given in the question. Okay, so we are told that PUL received a quotation of shillings 265 million from a logistics company. They received a quotation of shillings 265 million from a logistics company for delivering the chicks to the beneficiaries per quarter. Budgeted mobilization expenses for the first quarter are estimated to be shillings 50 million and will reduce and it will reduce by 20% in each of the subsequent quarter. Okay, PUL anticipates increasing its normal demand from the open market by 112,800 layer chicks during the year 2018-2019, irrespective of chick type on order received. Remember, as you read the question, you should be knowing what do you need. You need the total contract profit if they go ahead and sign the contract. Okay. Okay. The quarterly extracts from the financial year ended 30th June 2018 records relating to the number of chicks produced and the total production cost are provided as below. As you're using high-low method, you stand where you have the highest output, the highest production level, the highest activity level. You use that basis, the highest and the lowest. You use that basis to get the variable cost per unit. Okay, now we are told that PUL's management is contemplating on signing the contract, but has limited experience in handling such projects. You have been approached for advice. So how are we going to approach the question? This is question one. Question one. We are looking at cost estimation. We are looking for actually the cost, the contract profit. But using high-low method, we have seen that for you to get variable cost when you're using high-low method, variable cost per unit will be equal to variable cost per unit will be equal to, using high-low method, variable cost is equal to this. The total cost at highest level, let me hope this is visible enough. The total cost at highest level minus the total cost at lowest level over total chicks, because now you're dealing with chicks. Total chicks at highest activity level, minus total chicks at lowest activity level. Do you have these things? You go to your question. What is your highest activity level? Where do you have the highest output? The highest output is here. Then the lowest output is here. Once you identify the highest output and the lowest output, let me hope you're seeing the question. Once you identify the highest output and the lowest output, then read the corresponding amounts. The corresponding amounts are these ones. So what is the cost at the highest activity level? That is 1.2 million. Then what is the cost at lowest activity level? That is 400. Substitute in your formula. So here it will be the highest, this is the highest is what? From our table, what is the highest cost? The cost at the highest activity level? That is 1,200,000. Then what is the cost at lowest activity level? It was 400,000. Then what was our highest activity level? The highest activity level is
700.
700 and the lowest is 200. So you just substitute, in your formula. This is 700 minus 200. So what do you get on your calculator? Open bracket, put 1.2 million minus 400, close bracket, divide by, open bracket, 700 minus 200, close bracket. What do you get? This will be shillings. What do you get? Put some speed, put some speed. This is shillings 1,060, 600 per chip. So this is your variable cost per unit. This is your variable cost per unit. Now, from a variable cost per unit, we can be in a position to determine the fixed. We can be in a position to determine the fixed cost. So to get the fixed cost, to get fixed production costs, we can use the total cost function. We can use the total cost function, and that is what? That is from total costs. From total costs is equal to, you can get the total fixed costs, plus a total variable costs. Now, this is how you can get the overall total cost. But remember, you don't have fixed costs. That's what you're looking for. Now you can say that based on, let's say I use the highest, based on the highest activity level. For you, you can use the lowest. So now one student can use the lowest. All of you are going to get the same answer. Now, based on the highest activity level, what is the total cost? What is the total cost? And what is the output? Based on the highest activity level from our question, what is the total cost? At highest activity level, total cost is 1.2 million. Then the output is 700. To you who have used the lowest activity level, you will go with output as 200, then the cost as 400,000. All of you at the end, you'll get the same answer. So output here is 700, and here the cost is 1.2 million. So what does this one mean? Remember, this is okay. You are supposed to do like this. Y is equal to, do you recall the other formula? Y is equal to what? Do you recall the formula? Y is equal to what, guys? Who can recall? Master, you were on. I said Y is equal to what? Y is equal to what?
Y is equal to A plus BX.
A plus BX. Where Y is like your total what? This is your Y. Then total fixed cost is your A. Then total variable cost. Total variable cost is just BX. Because B stands for the variable cost per unit. the variable cost per unit, which we have. The variable cost per unit, we have it. Then X stands for the number of units, the number of output. So can you get fixed costs from that technique? The total costs I substitute now in this formula. I have the total costs. I have so I substitute in the formula total costs. I have 1.2 million. I don't know whether red is okay to you guys. Okay, total cost is 1.2 million is equal to fixed costs. It's what I'm looking for. I don't have, or you can say A, or you can, let's use A. You don't have A. Then plus total variable cost, that is B.
Excuse me, Abe.
Yes, please.
I think when we talk of total costs, we are supposed to add all those costs. Are we dealing with one activity? I think 1.2 is a total cost of one activity.
No. 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 This is the total cost at this. This is the total cost at this level. This is the total cost at this level. For us, we are basing on one level. You get it? We are not basing on all levels. Are we together, Martha? We are basing on one level. Either it is the highest activity level or the lowest activity level. You get that? So pick the cost, the total cost at highest activity level, which is this one. Or if you have used the lowest level, pick this 400 as your total cost. Substitute what is our B? 1,600. That is our B, 1,600. Then times X. X is the number of out, or X is the output or the number of units. The output at highest activity level, the output is 700. So here you multiply by 700. So you will get what? 1,200,000 is equal to A plus what? What do you get here? 1,600 times 700. What do you get? 112.
0, then 1,000.
0,000. Okay. So finally, what is your A? Your A will be now the other it will be 1,200,000 minus 1,120,000 and A is what? Is what?
It's 80,000.
That is the 80. The difference is 80,000. So it means that here, your fixed costs, fixed costs will be equal to shillings 80,000. But when you look at these costs, the way they are given, they are in what? The way they are given. Which screen are you seeing?
Question paper now.
When you look at the way costs are given, they are in what? They are in 1,000. They are in 1,000. So your conclusion you should bring those 1,000. So you can multiply by 1,000, which is equal to shillings 80 million. We are bringing this 1,000 because our figures are in 1,000. That is fixed cost. That is fixed cost. You're not done. You're not done. So someone who have used the high low activity level, still you'll get 80 as your A. You get 80. If you substitute very well, you still get 80. If you have used the low activity level, you still get 80. Okay, now after getting our fixed costs, After getting our fixed costs, remember these are fixed costs for the year. For the year ending, this is for the year ending at 30th June 2018. Okay, that is a fixed cost for that year. But remember, what are we told? What are we told? Here, your contract is for which period, first of all? Your contract is for the year ending, the contract is for the year ending 30th June 2019. So for us, we are trying to compute the total contract profit for the year ending 30th June 2019. Now, basing on this paragraph here, paragraph number 2, they told us that PUL bid to charge government this amount of money per check delivered directly to the beneficiaries. But they are telling us that the fixed costs are estimated to increase by what? By 10% per quarter in the year ending 30th June 2019. So you are going to use the fixed costs of 2018 to estimate the future costs in the year ending, for the year ending 30th June 2019. The cost will be increasing by 15%. So I can start with if you are looking at fixed costs, you have quotas. Let me just, in a table format, let me maybe put in a table format to make it simple. Let me put it in a table format. So you have your quotas. For the year ending 30th June 2019. How many quarters in a year? 4. 1, 2, 3, 4. Because they told us when you look at the question, they told us that the fixed costs are estimated to increase by 10% per quarter. So every quarter, the cost is increasing by 10% every quarter. So here, it means that we can do the workings here to get here. I can do the workings, then I get the fixed costs, the fixed costs that are in shillings. Okay, so how do I get the fixed costs for quarter 1? Remember, the year 2018 ended 30th June 2018 ended, and our fixed costs were 80 million. But now when we are starting the first quarter, the fixed cost will increase. The fixed cost will increase by 10. So it will be the previous fixed costs, then times the increase. So it is now this figure is going to increase by 10%. So I can simply multiply by 1.1. Or you get 80 million times the increase of 10%, that is 110. From 100 to 110. So all of you get the same answer. But the shortcut is this one. If it's an increase of 20, that is 120%, which is 1.2. Increase of 30, that is 130%. A decrease of 10, that is 90%. You'll be left with 90% if it's a decrease of 10. You multiply by 0.9. It's a decrease of 20. If it is decreasing by 20, then you multiply by 80%, which is 0.8. So what do you get here? 80 times 1.1. That is what? That is 88. Next. Next, this figure is going to increase by still, it is going to increase by every quarter, the figure is increasing by 10%. So previous quarter you have 88, this is going to increase by 1.1. What do you get? Guys, put some speed, kindly put some speed. Put some speed, put some speed. What do you get here?
96.8.
96.8 million. Then here it's 96.8 million. Then times 1.1, what do you get?
106.48.
106.48. Then next, this is 106.48 million times 1.1. What do you get?
117.128.
117.
Seven.
What?
0.128.
128 million. Okay, so we are done. Then what is the total fixed costs? Because we need the total fixed.
You can mute me, these girls are shouting from.
Okay, the total fixed cost. You add total fixed costs, total of fixed costs is equal to what? When you add those figures, these ones, when you add, what do you get?
Getting 408.408.
408. Okay, you can pick the figure the way it is, the whole of it, 40, like this. If you want to take the whole without keeping millions. All right. So we have our total fixed cost for the year ended for the year ending 30th June. For the year ending 30th June 2019. What about the variable cost? The variable cost per check for the year ending 30th June 2019. How do you get it? Because here they told us in the question they told us so yeah, they are telling us that the variable costs per unit will increase by what? Are you seeing this statement? The variable costs per unit will increase by 5% during the year. Which year? That is for the year ending 30th June 2019. So it will increase by 5% during the year as per the budget estimates. The variable cost per unit. You need to know what is increasing. Is it the total or the per unit? Here it's per unit which is increasing. So initially in 2018, we had In 2018, we had which value? It was 1,600. That is in 2018. Then we increased this by 5%. Tell me, if it is 5%, we multiply by what? If it's 5% increase, we multiply by what? Oh, yes, 1.1 or 1.05. 1.0. Here you get what? Here you get how much? This is shillings. This is shillings. Uh-huh, 1,680. Let me hope that's what you have. Per chick. Per chick. Okay? That's what you have. Next. 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 As you remember, colleagues, whatever we are doing, we are trying to get the profit. To get profit, you get total revenue minus total costs. That's how you get profit. That is the reason why we are doing all this. So we need to determine the total costs. We need to determine the total costs. But now, because I have variable cost per unit, I need to know what is the total variable costs. In 2019, what is the total variable cost? I cannot know the total variable cost when I don't know the number of chicks in 2019. Do I have the number of chicks in 2019? What you have, these are just the number of chicks in the previous year, that was 2018. So how can you get the number of chicks in 2019? The total. So the annual output, the annual output for the year, ending 30th June 2019 will be what? I first know the previous year I had what? The previous year production. The previous year production was how many chicks? If you look at the previous year total, if you add, what do you get? If you add, what do you get? Here, add these ones, what do you get? I'm waiting to hear from you. When you add, what do you get? This is 7. It is what? 7, 13, 20. So that is 20. That is 2,000 or 20? Oh, that is 2,000. That is 2,000. But remember, you have the 3 zeros. So this is you have the 2 million chicks. That is the previous year production. Okay. Then you are going to add additional production for the current year. So far, how many have you produced? In 2019, in 2019, you see that they told us somewhere that they come. Where is this? Are you seeing the number of chicks somewhere? Okay, are you seeing this? PUL anticipates increasing. Are you seeing that? They anticipate increasing its normal demand from the open market by 112,800 layer chicks during the year. This one, irrespective of chick type on demand received. So if they say that you estimate, you anticipate to increase the normal demand, it means that if initially you had this, automatically the increase of this will affect your original production. So here we are going to add the production is anticipated to increase by the demand. This is anticipated to increase. Now you add 112,800. These are chicks. So the total, what do you get? The total annual output. The total annual output. Now, to do this when you are running an exam is the one that is a problem. To interpret this question, that's what I normally say. You need to be very sober. You need to be very sober. The total is 2,112,800 chicks. So this is our annual. This is our annual output. This is our annual output. But wait, as if there is what we have not tackled. Just a minute. As you see, we still have just a minute. We still have, when you look at the question, there are also there is another output when you look at the question. When you look at the question critically, you see, when you look at the question critically, you see that PUL, that is during the year ending 30th June, PUL emerged the winner to supply 400,000 layer chicks per quarter for the whole year. So it means that this one will also need to be captured. We need to capture also this. We need to capture also this. So this is the contract, because you need this. This is from the contract output. This is from the contract output, but this one is from the open market, not the one based on the contract. This is from the open market, but this is the one based on the contract with the government. Okay, so here it's the 400,000 times the number of quarters, because every quarter you need to supply 400. What do you get here? That is 1,600. 1,600,000. These are chicks. So in a total, what do you get? The total, what do you get? The total output. The total output is what? The total output, when you add now the total, the overall, what do you get? The 2 million plus this, what do you get?
3,000. 712.8.
These are chicks. not amount leaderships. So we can go ahead and get we can go ahead and get the fixed costs per unit, per output. Get the total fixed costs. Then divide by total out. So this will be, you get this, your total fixed costs, it was this. The total fixed cost was this. The total fixed cost was this. Get that figure. Then divide by the output. This one. What do you get? Someone may be wondering, why am I doing this? I want to explain why I'm doing this. What do you get here? What do you get here? Put some speed. Put some speed. Time is taking us. We need to do like 2 questions. What do you get? Someone is saying 110. Eh? So you get shillings 110 per chick. Now, guys, the reason why you're doing this is that in the question, they need you to determine the total contract profit. Here, your focus is on contract. Remember, the figures you are getting includes also the open market. The total chicks you have here includes the previous year production, includes the chicks, the demand from the open market. Also, this fixed cost you see here, this fixed cost is not the fixed cost as a result of the contract. No, this is the total fixed cost for the whole year. But we need the fixed cost basically for as a result, the fixed cost arising from the contract only. That's what we need. And now it means that finally I can get all this. Let me just maybe in a table format. In a table format. I need the contract. Before I look at this, when you observe, we still have some costs. Just before I look at this, PUL received a quotation of this. This will be also for delivering the chicks to the beneficiaries. So this is a relevant cost. As we determine the profit arising from the contract, this is a relevant cost. But they told us that the budgeted demobilization expenses for the first quarter are estimated to be shillings 50 million and will reduce by 20% in each subsequent quarter. So it means that as you deliver these chicks, you need to mobilize. So you're going to incur these costs. They are relevant costs to your contract. So you need to also first get the mobilization costs. First get the mobilization costs. First get the mobilization costs. I can put here the mobilization 12 marks, but you need you see how you can set here mobilization costs. So they told us that The mobilization cost for the first quarter is estimated to be 50 million. So first quarter I put 50. First quarter I put 50. Here, 50 million. But this one is going to do what? To increase or decrease? It is going to reduce by 20% in the subsequent period. So here it will be 50 million times if it is reducing by 20, so you multiply by 0.8. What do you get? 5 times 8, that is 40. Here you get 40. Here you get 40. Then next, it keeps on reducing by 20. 40 million times 0.8. What do you get? 4 times 8, that is 32. So here you get 32 million. Then next, the last quarter, 32 million times 0.8. What do you get? That is, someone tell me, what do you get? 32, you get, this is 6.
25.
Pardon?
25,600,000.
25,600,000. Perfect. So if you add what is the total? The total mobilization expenses. When you add or you get 122, then this, you're getting what? That is 1 for what? 147.
7.6.
So that is our total mobilization costs. Then finally, I can get the contract profit. How can I get this contract profit? Because I can easily get all the costs. So to get the contract profit, maybe here you can have your details for proper presentation. MDC doesn't have the format. That is a challenge with MDC. Every manager can report in his own. So you get revenue. To get the profit, you get revenue. How do you get revenue? Which revenue are you going to earn? And how many checks to the beneficiaries? Output is what? The contract out, so the total is 1.6. So I multiply by how much PUL bid to charge government 2,540. So that's what you're going to use, 2,500, 2,500, 2,540, 540. How much do you get in terms of revenue? In terms of revenue, you're going to receive how much?
A big figure.
It's a big figure. When you're multiplying on your calculator, don't put this. You can include at the end. So get 1,600 times this. Just tell me.
4,064,000.
4,064,000. But don't forget to include the other 3 zeros. You get, Okay. So this is billion. This is in a billion. Is it in a billion only? Yeah, this is 4 billion. 4 billion. Okay. Then you raise the total costs. You raise total costs. Total costs. You raise the costs. Because you're looking for the, pardon?
Variable or fixed costs?
All the costs as a result of this contract. All the costs as a result of this contract. So it means that you start with variable costs. And what will be the variable costs? What was the variable cost per unit? The variable cost per unit, it was 1,000. You get this 1,000, 1,680, 1,680. Then multiply by the number of chicks, which is 1,600,000. So on your calculator, get this times 1,600, but don't forget to include the other zeros. What do you get?
2 million.
You get 2 million.
688.
So this is a negative 2,600,000.
88,000.
88,000. 88,000. So don't forget to bring the other zeros. What else? You have the fixed costs. The fixed costs. Here are the total fixed costs. What was our total fixed cost per chick? It's 110. So you get 110, 110. Then I multiply by the number of chicks that I want to supply to the beneficiaries during the year. What do you get? I think you see the reason why we had to do this working. Because if you use this, you'll be wrong. You'll be wrong. This is not the fixed cost resulting from the what? From the contract. This is what you get here will be the one from the contract. What do you get?
176,000.
176.
6,000.
But you added the 3 zeros.
Yes.
Okay, what else? What else? Which other cost do we have? We have the mobilization costs. We have the mobilization costs. And the mobilization costs are just these ones. Just copy and paste. Mobilization costs are these ones. What else do we have? Do we have any other cost in the question? Do we have any other cost in the question? Oh, we are done. What about this? What about this? Is it going to affect anything? Now, you guys, you need to understand that this is PUL received a quotation of 265 million from a logistics company for delivering the chicks to the beneficiaries per quarter. Now, this is what? This is transportation what? Don't you see that this is transportation cost?
Yeah.
This is the transportation cost to deliver those chicks to the beneficiaries. So you need also to add that figure here, the transport costs, which is 4 quarters times each quarter, it is 265 million. When you multiply, what do you get? When you multiply, what do you get?
1 million
1 million,
and 24,000.
1,024,000. 1,024,000. Is this figure right?
Which one?
The one you're giving me. 4 times
Yes.
this.
Yes.
You again do under it, you see?
265.
Someone has given me the calculator 4 times.
Okay, it is 1,060,000.
160,000.
Uh,
And the moment you put here wrong figure, everything will be wrong. So
I
here,
think you're adding another 3 zeros.
we add the other 3 zeros, like this.
Yes.
So when you add, okay, when you subtract, what do you get? Because we need the profit here. The contract profit will be, is it a profit or a loss? Contract what? Because sometimes it can be a loss. So get this figure, the revenue minus the total cost. Or you can first get the total cost here. First get the total costs by adding all these values. Then after getting total costs, get the total contract. But in an exam, just get the contract. The contract profit or loss. Get this. So when you're using your calculator, ignore the 3 zeros. Like for you, don't include them. Just get this minus this, minus this, minus this, minus this. What do you get?
Getting a negative.
If it's a negative, that is contract what? That is contract loss. Or negative what?
7.6.
7.6 million. And that is your answer. Remember now, this is not about just computing, but you need to evaluate, you need to advise. Should they go ahead and get this contract or not? What would you say? Because they said that you advise. Determine the total contract using this and advise on whether management should go ahead and sign the contract. Would you advise them to go ahead and sign the contract? Would you advise them to go ahead and sign the contract? So advise, you have to state the conclusion. PUL should not go ahead sign the contract. Should go ahead and sign. Should not go ahead sign the contract. Should not go ahead sign. Should not go ahead sign the contract. Because it gives what? Because it gives a loss of shillings 7.6 million. So what does this one mean? To get profit, for these guys to get profit, from this contract, remember your advisor, PUL should negotiate with the transporters, because you have a lot of figure here. This is a huge amount of money. just supply, just deliver the chicks. That is a lot of money. Negotiate with these guys. Are you saying that? Negotiate. To get the profit, you can negotiate. Should negotiate with transporters to reduce on transport costs. Or you can try to reduce on the what? On the mobilization costs. For you, if you want the profit, because here you're just advising them, they should not go ahead and sign the contract. But if they are to sign the contract, then they should try to negotiate with the transporters to reduce on the transport costs, or they see how they can reduce on the mobilization cost.
Actually,
the mobilization cost. If you reduce the mobilization cost, all you need is to get a profit from this contract. If you reduce, still you will get the answer.
It has an element of 7.6 also.
Pardon?
Actually, the mobilization costs have the element of 7.6, which can be reduced to avoid the loss.
Just you see, in these papers of level 2, the conclusion matters. The conclusion matters a lot. Your advice, because you're not like on level 1. Level 1, you don't normally evaluate. Here you are analyzing. You are a manager, you're giving advice, what should be done. If they are signing the contract, what should be done? So that's all about this question.